Okay, so how does Bitcoin mining work like on a legal level? What contracts do I need to sign? What contracts are even out there? How should I form the entity? What sort of economics make sense for certain plays? And what about like this whole flare gas mining thing that people seem to talk about ad nauseum? Well, you're in luck. Today on the Mining Pod, we are bringing on Justin Ballard. He is the GC at Akon Energy and also the founding partner at Firm 21. Justin is a longtime friend in the industry and also is a prolific podcaster with Digital Wildcatters, the empowering or energizing Bitcoin show. So definitely go check that out. We brought Justin on to talk about all those topics we just mentioned. So definitely stick around if you're trying to answer any of those questions for an operation that you are trying to boot up. And then on top of that, if you're just wondering like if Bitcoin mining makes sense or is economical for certain situations, especially the flare gas thing, then you'll want to stick around for the show because Justin goes into it in depth. He talks about like where it makes sense, where in the US geographically this play is underexplored, and sort of how to set this up on a legal level as well. Okay, before we get into the show, we want to thank CleanSpark and Former Mining for being our lead sponsors for the Mining Pod. Thank you to both of them. You'll hear more about both these sponsors later during the program. Okay, on to the show. Hey listeners, let's talk about revolutionizing your mining operation with Foreman. This isn't your average management tool. It's an all-in-one solution for reducing costs and significantly boosting your revenue. Foreman brings a cutting-edge dashboard to your fingertips, empowering you with automated energy strategies. This means not only curtailing around real-time prices, but also strategically enhancing your profit margins through demand response. It's about leveraging energy efficiency to its fullest potential. With Foreman, you get a system that scales with your business, inventory management for assets, infrastructure integration, and business intelligence. Foreman elevates the cash flow and production of your entire operation. To see how Foreman can redefine your mining operation standards, visit foreman.mn. With Foreman, you're not just managing a mining operation, you're setting a new standard in the industry.
Accelerated by Compass is the premier accelerator program for Bitcoin mining sites at any stage of development. Our managed services provide expert guidance in site procurement, construction, energy agreements, and mining operations. Compass helps clients meet timelines and expectations for operational excellence, from greenfield to retrofits and everything in between. Don't just mine, excel. Visit compassmining.io now to discover how Accelerated by Compass can power your success.
Are you a retail or institutional investor interested in Bitcoin mining companies? The Miner Mag brings you free data and analysis from all major NASDAQ-listed Bitcoin mining operations to know who stands out. Check out visualized metrics and data-dependent stories at theminermag.com.
So weird.
Welcome back to CoinDesk Live from Consensus. We're coming to you from the CoinDesk podcast studio, presented by BitGo. Founded in 2013 with the first institutional-grade Bitcoin wallet, BitGo is the gold standard in custody, staking, and settlement. Today, BitGo supports over 800 coins and processes 20% of all Bitcoin transactions by value. Check them out at bitgo.com. I'm Will Foxley, and this is the Mining Pod live from Consensus. We're joined today by Justin Ballard, who is not only a good friend, but he's the general counsel at Akon. Is there like a second part to that name? Just Akon?
Akon Energy.
Akon Energy, and then also the co-founding partner of Firm 21 Million. Justin, welcome to the show.
Thank you for having me, Will. It's a long time coming.
Well, we've done a few shows before, but first live one, I think.
First live one.
They've always been remote.
Yeah. But I've wanted to get on here with you and want to have you come on to ours too.
Yeah.
This is the first of our crossover episodes.
Give the plug for what you're doing.
All right, Energizing Bitcoin. We're on the Digital Wildcatters platform, and we're not a mining pod yet, but we're working on it. We're trying to ride your coattails and follow your footsteps, man. Trailblazer.
Shout out to Digital Wildcatters. I mean, no, Digital Wildcatters has actually been super helpful for me. Yeah, what Jake and Colin have done, they've helped me out a lot as I'm getting my media startup going. So,
well, they obviously think very highly of you, and we also put on the Empower conference.
Yes,
we had it in March this year, and it went very well and continuing to grow. And I think there's going to be even more growth with it this coming year. So, I guess next year.
Yeah, it's going to do great. Yeah. It was great this year. Okay, so for this show, what we're going to be talking about is Bitcoin in the sea of tokens at Consensus. We're going to delve into the orange side of the pool. Let's talk about Bitcoin mining and what you're doing with Bitcoin mining, specifically on the legal side. And we could probably do a bio in there first, right?
Yeah. I guess you want me to just kind of delve into my background?
Yeah.
All right. Well, I'm kind of the Forrest Gump of the Bitcoin world, I think, for a variety of reasons, but hopefully mostly of the good reasons. But I've had a lot of different kind of hats I've worn in the space so far. I'm an attorney by background, obviously, and I got my start with Bitcoin mining actually in the oil and gas industry. I was at a private equity-backed oil and gas company that had started up in Wyoming. We had a well that we had drilled that we couldn't get a pipeline into, and really the only option was to put a Bitcoin mine on the well site. This is back 2018, 2019. We ended up getting a small mine set up, about 30 kilowatt mine. We worked with Crusoe on that. Actually had gotten the idea, though, initially from something I read about Steve Barber with Upstream Data. But we ended up putting that small site on there, and then actually I'm kind of looking back at the numbers and trying to figure out what we're making from this Bitcoin mine, which everyone made fun of me about wanting to do in the first place, except for Ryan Leachman. He ended up coming on, and he backed it as well. And once he blessed it, everybody was willing to do it because he's an ops guy. But I'm doing some back calculations, and it was coming out to about $7 to $9 an MCF. At the time, people were selling gas for about $1. And so, when I realized that kind of revenue could be generated, I thought, I'd have tried to raise some money and put together a bigger operation on this, which I did. And in 2020, we started J Energy and kind of grew pretty quickly, mining strictly off natural gas in Wyoming. Got up to about 9 megawatts worth of mining operations, and then did some on-grid deals in Texas with Texas Pacific Land. They're a large publicly traded company, largest landowner in the state of Texas, and ended up kind of growing that way, and then left Jay after a couple years and went to another law firm where I worked primarily on Bitcoin mining deals and put together several more, and then left early this year to join Akon Energy, where I'm the general counsel. We have about 225 megawatts of power in a PPA at a power plant up in North Dakota. We're working with some very large groups where we host, and we have a little bit different structure. Can't talk about it publicly about our structure, but it's a little creative and able to give people opportunities to keep their power price very low and get some very reliable power. And we got a locked in power price for a long time, and it kind of is what I think is going to help set us apart from a lot of other groups out there, is having kind of long-term locked-in power. And then I also recently started Firm 21M, where we are focused exclusively on Bitcoin mining deals and Bitcoin mining work. And we've grown rapidly. I've been really surprised and happy with who we've been able to pick up. And it's been great. And just kind of, the nice thing about this entire space is that we're still really, really early. And there's opportunities for you to kind of make businesses out of ideas and be creative with what you want to do with your time and your expertise. And I'm lucky in that there's not a ton of attorneys that have operational experience in the Bitcoin mining industry. And so it's kind of given me the opportunity to reach out to some large scale groups and have a lot of fun doing what I'm doing.
Podcaster, lawyer, ops guy,
dad,
does it all.
Yeah, getting married next week too.
Next week.
Man, I'm just trying to get everything knocked out at the same time.
I love it. Okay, so let's talk about the legal side of things. I think that's the thing I want to talk about most for this show. We've had you on before. We did the TPL deal, believe it or not, over 2 years ago.
Yeah.
So that was a huge deal. Go check that out. It's in the Mining Pod archives if you're interested in, again, the largest landowner in Texas and how they came to deal with your firm at the time to mine Bitcoin.
Right.
But tell me a little bit about the legal structures you guys come across in Bitcoin mining, whether it be a JV operation, you're trying to sign two companies to work together, or standing up a new startup.
Yeah.
How are you kind of work in this new legal landscape for Bitcoin mining?
Yeah, so that's a good question. There's a lot of room for creativity in this industry, and I've talked about it a lot before, but there's so many similarities between Bitcoin mining and the oil and gas industry. And that's true from the fact that, in oil and gas, you have a well bore that you generate hydrocarbons from that you then sell for USD. In Bitcoin, you have an ASIC that you produce terahash from that you sell for Bitcoin. Both industries, you want to be the lowest cost operator to produce a barrel or a Bitcoin. And you deal with decline curves and competition, and it's a commodity price-driven environment. So there's a lot of similarities in that, and then there's similarities in how you structure those deals. Now, I think that helped me a lot coming into the Bitcoin world because I had a lot of experience already putting together deals in the oil and gas space. And so, seeing those correlations, it's like, okay, well, we can structure these very similar to how I structure those, which are JVs, royalty type structures, which in this case would be royalties on hash rate, things like that. But I think we're still really early, and so a lot of in the Bitcoin mining space, you haven't seen as many JVs as I think you see in oil and gas. They're starting to happen. We're also starting to see a lot of the mergers and consolidation from some of the larger groups. I think you saw that Riot came out trying to make some type of purchase of Bitfarms the other day. So there's things like that going on in the space that I think are an indication of like the maturity of the industry and how things are starting to move around, and people are looking to be more strategic instead of just going out and grabbing a site and then building their operations. There's different avenues to growth, and so there's a lot of different ways that you can structure it, and they're starting to open up even more. So I think that as the capital gets more bigger to build out bigger things, you're going to have more collaboration between groups that start trying to attack a project collectively instead of just kind of hunkering down in your own shop. So I think it's good. I think it will continue to happen, but that's been the primary the primary avenue has been basically finding sites, working out deals with either landowners or the group that owns the power, and one miner. It's starting to expand into more of a collaborative environment, though, I think.
It's like much more professional, I'd say, than many other sectors in crypto, which I think is the interest for a lot of people to get into Bitcoin mining specifically. Yeah. It's like it's much more stood up.
Well, and especially when you're working with like groups that are more institutional, or like oil and gas, it's very, I'm not using this completely negative, but like archaic. And, that they have done things the same way for a long time. And getting them on board with, some of the newer projects that nobody's heard of, which a lot of those groups are obviously here at Consensus, but Bitcoin is kind of, the grandpa. And it now with the ETF, I think that's really opened the door to seeing a lot of energy companies looking at actually implementing Bitcoin mining as a way to, generate new revenues or diversify revenues, or even just looking at it as a viable option to get rid of flare gas or to take care of a problem that they may have regarding excess energy and things like that. I just did a deal in Oklahoma with a midstream company that had their own privately owned substation that was being underutilized, and they had some charges that they were incurring for the underutilization. And so they reached out to me to help kind of figure out how mining works. Well, we just closed that deal, and they've got a nice size operation going now with a miner. That I like to see that stuff because it's showing the viable nature to them that this is something you can start using in your strategy to kind of either maximize your profits or get rid of a problem. And that's going to happen more and more. And I was really happy to get that one done because that's something I've been talking about for like 4 years, is that there's opportunities in portfolios of energy companies all over the place that they don't even realize are there. And so once this group did it, and I can't wait, I'm going to have them on the podcast here pretty soon with the mining group, so we'll get to talk about it more, but they're a very, very, one of the largest private equity groups backs them. And so seeing that happen, it gets me excited because it's a precursor to what I think is going to happen throughout the entire industry. And dude, we've been talking about this for a long time. Like, once oil and gas companies get in it and energy companies get in it. Yeah. Well, I really do think the ETF gives them a lot of credibility or like confidence that this is viable.
Is it because like the market's more liquid, or is it because like these big asset institutions have like given the stamp of approval?
I think it's a stamp of approval more. I think that it's almost like a legitimization that this is real. You have really kind of an adversarial SEC approving of it, and so now that has happened, they're more inclined to say, okay, we can look it out. We can do this. This isn't going to, this isn't going to come back and bite us in the butt, frankly.
In the competitive world of Bitcoin mining, one name stands out: CleanSpark, America's Bitcoin miner. At CleanSpark, efficiency isn't just a goal, it's our standard. Our sophisticated facilities are built and led by expert teams who care about Bitcoin and the communities we work in. Scale, we've mastered it. Our large-scale operations have set us apart in the industry as examples of community-oriented building. Our track record speaks for itself. We navigate the complexities of the new economy with precision and with skill, continuously achieving operational milestones. Curious about how we do it? We invite you to discover the story behind CleanSpark's success at cleanspark.com.
I want to walk out like two different situations. The first one I want to walk through is like, what sort of deals have you seen with these energy companies? What would be an example you give to someone who, friend or family who might kind of know the energy industry, but generally is unsure how Bitcoin mining plugs into energy?
Oh, right. Okay. I'll give you two scenarios. I'll give you the one in Oklahoma because it's a very recent one. It's easy. The underutilization of a midstream facility or power plant or substation, I'm sorry. That is a very common situation in the oil and gas space, is that they own substations that were built to scale for their maximum operations. Well, obviously, oil and gas, you drill wells, you go somewhere, you have enough product coming into a certain place, you need the maximum level of capacity, but things move on. Like, you drill up all your locations. So the activity then is going to go to another location, and inevitably you're going to have an overbuilt substation where you have excess capacity. 85% of the capacity was available at this one. And because of the structure they had with the utility, they're carrying these extra costs. And so it's like, if we can go in and utilize all that power, we're dropping our CIAC charges dramatically. And it's a huge cost savings for them for something that was already existing. It doesn't require any capital from them. They just went out and said, okay, we are willing to bring a miner onto our location and allow them to set up operations that are going to coexist with ours, and provides us a huge value. They also get a surface lease out of the deal, and so they're getting a little bit of extra revenue from that. But the main driver economically was cost savings because they're spending this every month. Another one that I'm working on and looking at a couple different situations with it is oil and gas companies that out in West Texas in particular, where Waha gas prices, which is the regional market, and a lot of people, I don't know, your audience probably doesn't realize how gas pricing works, but it's very regionally based. And Waha is the West Texas, New Mexico kind of area, highest drilling activity in the country. There's a lot of gas that can't get to market, and the prices often are negative, and so operators are having to pay money to put their gas on to the market, or they are so constrained by pipeline capacity, there is none, that they can't sell their gas, and they can't then bring their oil to market. And so that actually negatively impacts all of us, because we end up paying more at the gas pumps, we end up paying more for utilization of the oil, of the hydrocarbons. And so in those situations, I've got groups now that are looking at utilizing gensets they either have already, or buying gensets or renting gensets from mining companies, and basically giving power away to miners so that they can bring their miners in, and they're running at a very, very low cost for OPEX. You may not hit the highest runtime, but you're looking at a power price of sub 2-3 cents. So
how much energy do you think is out there for that kind of thing? Because this was a huge storyline.
Right.
2021 was, we're going to fix all of the energy problems of the world by moving flared gas to Bitcoin mining. Is there like really enough energy to...
Yeah, so man, this
is
how much time we got? Yeah, this is a deep subject, because it is something that I think is misunderstood a lot. Is we talk about flare gas, and it's like, oh man, there's so much flare gas, we could mine the whole Bitcoin network with flare gas. In the U.S., the vast majority, I want to say it's around like 98% of the natural gas that is produced goes to market. So a small percentage is actually getting flared, and of that, it's not that this well that started flaring right after it was produced is going to continue to flare over time. They may not be able to get to market for 2 or 3 months, something like that, but it's eventually going to be tied in and it's going to market. So that isn't a viable mining project, really, not for a mining company. Now, I do think that there's a play for groups who come in and basically work with midstreams or work with an operator on setting up a location, removing flare, and then bouncing with them. But it would have to be a much different structure than just living off your mining revenue. So it'd almost be a service that's provided to these oil and gas companies or midstream companies. And when you're evaluating whether or not you can actually make a flare gas well or flare from a gas well profitable for a miner, there's a lot of evaluation that goes into it. And it has to do with duration of the flare because those wells decline. It has to do with the quality of the gas. It has to do with whether there's H2S, which is very dangerous, deadly molecule that can be in produced gas. And so there's a lot of things that go into it. I don't think it's as big a play as people think sometimes. What I do think there's a big play for, though, is the stranded gas in West Texas and in New Mexico. That area has severe capacity issues, like I was mentioning, and getting that gas to market is very, very difficult, and that prohibits the oil sales in. So while it's not flare, it is shut-in gas that you can then work out a deal with a miner, create a much better stream of revenue for you. Instead of paying $1, you might make 50 cents. So that's a big swing when you're talking, 3 million MCF a day on a pad. And a miner can turn that into a sizable operation. It really only takes about 250 MCF to create 1 megawatt of electricity. And so, 250 MCF is not much. That's not much. Natural gas, as bad a rap as we get from, environmentalist groups, is probably one of the most efficient power producing energy sources you could find. It has a very small footprint, and it doesn't take much to generate enormous amounts of power. So there is a market for the flare or gas mining. I think the flare gas mining, if you're looking at setting up an operation, I'm gonna give my shameless plug right here. You should call us, because in addition to our legal services, we offer a lot of consulting services as well. And I think I had to visit with a guy this morning about consulting opportunities, and they were looking at some different groups that they're not from the oil and gas space, and that's something that I think these groups, which probably no one would ever have normally thought. Like, I don't know if Satoshi came in thinking like, this is going to be a really big opportunity for a bunch of oil and gas guys. I don't know if he thought that or not, but there's such a correlation between the two that I think there's a huge opportunities for the oil and gas companies to get involved, but also miners who get involved working with oil and gas companies.
Need ASIC help? Check out Vitamine, one of Bitmain's certified repair shops located in Washington State with satellite offices in Colorado, Oklahoma, and Texas. PSUs, hashboards, immersion setups, in and out of warranty repair, Vitamine has you covered. Want to train your technicians? Bring Vitamine to your site for hands-on training in the art of ASIC repair, complete with Bitmain AMTC certification. Contact Vitamine today at dan@vmasic.com. Again, that's dan@vmasic.com. When you think of ASIC repair, think Vitamine.
Well, this is the second thing I actually want to talk about, is you to do more extended plug here for the services you guys offer. So if I came to you and wanted your consulting services, what are the sort of things you lay out to a possible client for, let's say, a stranded gas case where, I have some capital I raise, or I have some capital from like debt, something like that, and I'm coming to you saying, I have like these options from energy brokers. How would you go about looking at these things and setting up some sort of entity to be able to mine Bitcoin?
Like evaluating it,
and then setting up the structure for like the startup to actually function.
Right.
So you're one of the rare people who has both done that and knows like the legal documents from being a lawyer.
Yeah.
And then has a podcast too, so you can talk about it.
Yeah, I do talk about it a lot on the podcast, on ours, because our podcast does focus on like energy aspects of Bitcoin mining. But yeah, the first thing you got to find out is obviously who owns the actual gas. And there's a lot of, as easy as that sounds like it should be to determine, it's not. There's a lot of different things that go into it. There's a lot of contracts involved, whether or not the gas is dedicated to a midstream facility. The timeline, the production decline on a well, they can be very, very steep depending on the play. The quality of the gas is a big one. Not all gas is the same. It varies greatly depending on where you're drilling. It can vary greatly on the same acre of land depending on what formation you go to. So there's a lot of different things that factor into whether or not something is going to be a viable oil and gas play.
Not to interrupt, but it's just kind of striking me that we're sitting at Consensus and we're talking about oil and gas.
I know,
and
dude.
finding different types of nat gas in an oil formation.
This is not. I bet you we're
this is Bitcoin, though.
This is Bitcoin. But this is. I guarantee we're the only ones talking about this here right now.
100%.
And I'll probably be the only one that ever talks about this here. But it's fun to see where the industry's gone from when I did first do it with Jay to where it is now, especially in the oil and gas side, because you probably remember like when we did the little video you did with us out in Wyoming, which was awesome, by the way, and I encourage everybody to go watch it. And Will
get my views up.
Puts the dopest little documentaries together in the space. But when we first got doing that, do you remember how many people were just like, we're going to go mine off flare gas?
Everybody.
Yep.
Everybody. And that's kind of what I'm curious about is like, how often do you discourage people from doing this?
A lot.
Yeah.
A lot, because it's not viable in all situations. And so, it's a lot more complicated than just like oil and gas companies be like, well, you just plug a computer in. It's more complicated than that on the mining side. And miners that think they can come in and just take over a wellbore and throw a Bitcoin miner on it, they're going to run it 100% of the time. They're completely wrong. It's not going to work that way. So that's another thing to look for when you're looking at mining opportunities on gas is the production history and how long is this well on, how consistent is the production, who's the operator, what if they have to do a workover, which is shut your production in. So there's that's where the legal side and the consulting side come into play, is that when you're contracting these up, you've got to make sure that you're covering all these different issues that, that's another plug, but if you're working with a firm that doesn't understand the needs of both industries, you can get in a situation where you're going to have a terrible contract.
Let's hear about one.
Well, one where the miner did not realize that a workover is going to require them to be shut in. And
can you walk out those terms for the retail audience that's not oil and gas?
So I'm sorry, my bad. So a workover is basically you drill a well, you got it producing, and at some point there's corrosion on the casing in the well or the tubing or something, and the oil and gas company is going to have to go in, shut that well in. They come in and do a workover. It can take a substantial period of time, and that entire time, they're not going to be selling gas to you. And so you've got deployed, say 2-3 megawatts worth of equipment on a site that you sit there and watch while you're paying. If you're renting gen sets, you're paying those rentals still. If you bought everything, you put up that capex, this is severely delaying your production. And depending on what your terms are with your investors or how you got your money together, that can be catastrophic, and in some cases it is. And I've ended up picking up deals where I then take it to another group who understands it a little bit more, because the mining group didn't realize that this is something that if it takes a month and a half to get a workover and get a well back online, you're not producing anything for a month and a half. And so if you don't know what you're getting into, you really shouldn't do it. And if you are going to do it, you need to get people in there that can help you evaluate whether or not this is a viable opportunity. Just knowing what you know and knowing what you don't know, man. It's like anything else, And that's why a lot of the oil and gas companies get concerned about getting into the mining space themselves. They don't know what they're doing on it, And so it's both industries need each other to kind of execute and make it a good opportunity and make it work. So, knowing what you know and knowing what you don't know is probably one of the most valuable skills anybody can have.
Are you headed to Mining Disrupt? If you are, check out the second annual Print Crypto Poker Tournament hosted by the Satoshi Action Fund. Puff cigars, enjoy drinks, and play poker with everyone in the Bitcoin mining community Tuesday, June 25th from 8:30 until midnight. Teams from Foreman to Ocean to Swan will be in attendance. You don't want to miss it. You can find a link in the show notes below.
Let's zoom out and do a little Bitcoin topic here. So one thing that I'm kind of picking up with what you're saying is that it's a little more expensive than you'd think it is to mine Bitcoin because there's mistakes. So you got to bake in that margin. And to me, that just makes me think that it's going to be like more centralization around Bitcoin mining because you're going to need a lot of capital to be able to keep these operations running. From your experience, both working with some big players at Akon and then also with Firm 21, and then also your experience running a Bitcoin mining startup.
A little bitty guy. Yeah.
A little bitty guy.
Yeah.
What was like your learning from the economics of Bitcoin mining here?
Well, they can be very different, but they're also pretty linear, right? Like things scale up and it doesn't change a whole lot. But I think probably the biggest learning for me was that on-grid is way, way easier than off-grid. But off-grid can be way, way more fun if you got the right kind of team.
A little more cowboy?
Yeah, a little more cowboy. And like, you know, there's a sovereignty aspect, obviously, to Bitcoin and to the Bitcoin world. And I think that's where a lot of that interest came from, is because you're off grid. You've got your own kind of little world set up out there. You're not dealing with utilities and all the things that come along with the regulations being on grid, you know. And so you feel like you got a little bit more control probably in some respects. From a regulatory front, I would say yes. You also have a really good story that you can tell, especially if you're working with flare gas. So I enjoy that kind of cowboy nature of it. And that's why I haven't like moved completely away from flare gas stuff. I like it. I enjoy it. And there's some really unique opportunities that you can find in it. So, you know, while the on-grid stuff is big and scalable, and, you know, frankly, somebody like me can probably make more money working with big deals like that and all that. There's an aspect of flare gas and just gas in general that I enjoy and that I'm always going to probably be partial to because it's just more fun. And it's like if the world went to shit and I've got to like figure out what I'm going to do, I would have some little natural gas Bitcoin mine in my backyard. That's how I'm like, okay, like that would keep me afloat financially. And like
that definitely appeals to a lot of Bitcoiners. Yeah. Okay, flip side, as we kind of close out here, Akon now. What does it look like to be working at a big mining firm, and what are you seeing in the tea leaves for Bitcoin miners this year? Like, I'm talking the big guys. You referenced Riot and Bitfarms earlier, so it does seem like M&A is in the playbook later this year.
Right.
What, from Elbow's perspective, are they a friendly competition, or is it like?
No, I think it's friendly competition, right? For the most part, things like that will probably change. And look, I will say I don't know anything about the Bitcoin or the Bitfarms and Riot stuff other than what was out publicly. I just want to make sure everybody understands that. But I think for the most part, things are still very friendly, and there's enough meat to go around. But that will change, just like it has in oil and gas. There's only so many basins, and the opportunities to grab large chunks of power at a rate that you could actually build a company around, a large company around, they get fewer and fewer. So you got to start getting more creative and finding ways to, like, you know, how am I going to build out some generation that could, you know, build a big Bitcoin, publicly traded Bitcoin mine around? It's going to get more and more difficult, and so that's where I think the M&A stuff will start happening even more. But I think one thing that I don't hear talk about enough still is the value of long-term locked-in power. And I think PPAs, like we have at Akon, a long-term PPA that we did with Rainbow, those are going to become more and more valuable, because even if you just look at power and inflation, how it's priced in with inflation over time, it's going to go up. I don't see any reasonable case for why power is going to all of a sudden start getting cheaper over the next 10 years. So finding ways to lock in power now for the long-term future, it's going to become more and more valued. And I think that's one of the things. That's one of the big reasons I wanted to go to Akon was that I had a few different opportunities, but Akon having that locked-in power for 20 years is like that's really, really valuable, and I think it's going to help further set them apart as things go on and provide us different opportunities to be even more creative on our structures. So, yeah, I mean, I think that's probably one of the most discussed things I've seen. You see a lot of people setting up on grid, and that's good. There's great opportunities. Texas, TVA, PJM, MISO. There's more and more utilities getting more and more open to it, but like having a behind-the-meter locked-in PPA, I think is going to be invaluable in like 5+ years.
That's the real Bitcoin, huh?
Real Bitcoin.
Okay, well, we got to wrap there. It's Justin Ballard of Akon and Firm 21M. You can find him on Twitter, prolific tweeter. That's it for the Mining Pod right now. We're going to take a break and return to the CoinDesk podcast studio after a little bit.